All right, let's break down the major economic events that are really going to shape the markets in the coming week.
So, what's going to be driving the markets? We've got everything from crypto flows and central bank drama to a massive, massive market event. There's a lot to get through, so let's just dive right in. Okay, here's the plan. We'll start by taking the pulse of the crypto space. Then we'll unpack a huge derivatives event. After that, we're heading over to Asia for a pivotal central bank decision. And we'll wrap things up by looking at the health of the US economy.
First up, let's follow the money. I mean, if you really want to gauge the mood in the crypto market, you've got to see where the big institutional players are putting their cash. And here's the big story. Just look at this. Institutional funds for both Bitcoin and Ethereum are seeing some seriously positive flows. This isn't just a bunch of retail hype, okay? This tells us that the big money, large-scale investors are sticking around. And to put a hard number on that, last week alone saw a net inflow of $223 million. I mean, that's a level of positive sentiment we really haven't seen in quite a while. Pretty significant. And it's not just the funds, you know. This trend is also showing up on corporate balance sheets. Check this out. 7 major companies actually added to their Bitcoin reserves, while only 2 trimmed their positions. That's a big deal. It shows that more and more corporations are starting to treat Bitcoin as a legitimate asset to hold in their treasury. So, what's the big takeaway here? It's pretty clear. Despite all the volatility and the noise you hear, the major players, the whales, they're not panicking. The big money is holding its ground in the crypto space. Now, let's switch gears and see how this all stacks up against a huge event that's brewing in the traditional markets. Okay, now for what could be one of the most significant scheduled events of the entire year for the stock market. It has this kind of spooky name, Witching Friday, or Quadruple Witching. And basically, it's what happens when 4 different types of derivative contracts, we're talking stock index futures, stock options, all of it, all expire on the exact same day. It's a huge deal because it forces traders to either close out or roll over all those positions at once. And the scale here, it's just mind-boggling. We're talking about trillions of dollars in value expiring. Trillions. This kind of thing can cause some major market volatility and some really unusual trading volume, especially since it's happening at the end of the year. So yeah, you're going to want to mark your calendar for this Friday. A lot of analysts are watching this super closely because it's seen as a potential trigger, a catalyst, for a pretty major shift in the market. All right, let's shift our focus over to Asia now. All eyes are on the Bank of Japan, which is really at a crossroads right now. So here's the million-dollar question. Is the Bank of Japan's first rate hike in years already priced in? I mean, after forever with negative rates, they've been hinting that they're ready to raise them. But has the market already baked that in? And this really breaks down the 2 competing theories perfectly. You've got one camp that thinks a real rate hike, not just talk, is going to shock the markets and cause a downturn. But then you have the other side, which argues that all the recent warnings from the bank, that was the real event. The market is already adjusted and it's looking ahead. And we're going to get some clues this week. On Monday, we've got some business sentiment surveys coming out. If they show improvement, which they're expected to, that could give the board the green light they need to go ahead and raise the rate to 0.75% on Friday. And finally, let's head back to the US, where we're about to get a whole flood of economic data that's been delayed, and it's super important. We're about to get hit with 3 major reports: the jobs report, the consumer price index for inflation, and retail sales data. This is going to be our first real look at the U.S. labor market and the economy since the Fed last met. But there's a catch. So the general forecast among economists is for about 50,000 new jobs created, with the unemployment rate hitting 4.5%. Now, those numbers would point to a cooling labor market, which is what the Fed wants to see, but not one that's, completely collapsing. But, and this is a big but, there's a major catch. Because of the recent government shutdown, the data we're about to get is actually incomplete. Yeah, what happened was the Statistics Bureau just couldn't collect all the necessary information for October. They couldn't get all the price info and they couldn't do their household survey. It puts a big asterisk next to everything. So what does this actually mean for the data? Well, it means the jobs report won't have an official unemployment rate for October. And the big one, the CPI inflation report, it's not going to show the monthly changes for most categories. This just adds a whole other layer of uncertainty to what's already a really complex picture. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel and the first comment. See you next time.